Derek, hello. Thanks for joining me today. Cool vest, first of all. Obviously, that's most important here. But beyond that, we're here today to talk about homes with a new roof, right? If you're a homeowner in West Michigan and you have a new roof on your home, new meaning a couple of years old, 5 years old, 6 months old, in the insurance industry, that's considered a new roof. Uh, and we'll give you a quick look at where you can identify that on your insurance policy. What is the age of the roof that's being used on your insurance policy? And while we do that, Derek, tell us what impact that has to the homeowner if they have a new roof. Is it good? Is it bad? Is it indifferent? What does that mean to the homeowner in the insurance world?
Yeah. Well, first off, this is my hunt and fish and love and everyday outfit here. Went to Costco. Paige sent me to Costco for some long folding tables, and she told me I was allowed to spend $40 on clothing in there because if you're anything like me, you can't walk in there and not find something that you have to put in the cart clothing wise. So most of it never ends up fitting, but I can't stop buying it anyway. So $40, here you go. Not bad. Got my Luke Bryan going on. I've got my Bart Simpson haircut. I'm feeling good.
You
So
do. Yeah,
yeah,
okay.
yeah,
You
things
said
are
it.
good for me. Anyway, it's never bad to have a new roof. It's always going to be good. There's
Why?
a few things that come into play there. Number one, you're going to pay less for your home insurance when you have a new roof because pretty much every insurance company these days uses the age of the roof as a rating factor.
Okay.
So about 10 years old, that's when you're seeing just neutral rating impact. Not good, not bad from a pricing perspective. At 20 years, you're going to be paying more for sure. You'll have a negative rating impact when a roof hits that 20 age mark. 5 years and newer, you're seeing some serious premium benefit based on the discounts that are available because of the new roof. So, from a pricing perspective, it's always good to have a newer roof.
Okay. What about from
There's
a coverage standpoint?
from a coverage perspective, it's also beneficial for a few different reasons. Number one, you're going to always qualify. I shouldn't say always, it is insurance. You're going to typically qualify for replacement cost coverage on your roof.
Which
That
means what?
means that means that if it gets destroyed by a windstorm or hailstorm or something like that, the insurance company is going to come and put a brand new roof on your home. So if it's 5 years old and it's destroyed, you get a brand new roof. If it's 8 years old and it's destroyed, you get a brand new roof. The opposite sometimes comes into play, again, depending on the insurance company, once the roof hits that 10, 15, 20-year age. A lot of insurance companies switch over to what's called actual cash value coverage, which we refer to as depreciated coverage. That means that if my roof is destroyed when it's 20 or 25 or 30 years old, it's almost at the end of its useful life. The insurance company isn't paying me what it costs to put a brand new roof on my house. They're paying me what the depreciated value was of that roof that was 20, 25, 30 years old, which in most cases
Probably almost
is
nothing.
pretty minimal, right?
Got it.
Exactly. So from a
Got it.
coverage perspective, it's beneficial there. There's one other piece of it also, and that's the deductible. A
Hmm.
lot of insurance companies will require what's called a wind or hail percentage deductible when a roof reaches a certain age. So, again, let's use that 10-year mark. That's what we see in a lot of cases. In
Okay.
those instances, the insurance company will say if the damage to the roof is due to wind or hail, which is generally going to be the case, the deductible is not what the normal policy deductible is, which is oftentimes $1,500 or $2,500. Instead, the deductible is a percentage of the dwelling coverage on the policy.
Hmm.
Most of the times, we'll see somewhere between 1 and 5%. So if you have $1 million home and you have a 2% wind or hail deductible, that means that your deductible is $20,000 when you have wind or hail damage to your roof, despite the policy's deductible being $1,500 for all other types of claims.
Hmm, got it. Okay. So if you're a homeowner with a newer roof, right, you want to take a look at your home insurance policy and you want to make sure you're getting the benefit of that newer roof that's on your home, right? And here's where you would see that in your insurance policy. This is just one example. Each insurance company is going to lay it out differently, but you're going to see somewhere near the home insurance coverages that states the age of the roof or the year the roof was last replaced. In this example right here, you see 2019. So is that new, new? No. But is it hurting the homeowner? No. It's in that new enough window where this policy is providing replacement cost coverage. That's what you want. There's not a bunch of underwriting hoops. You're not getting negative pricing perspective. So this looks good. But if this policy showed 2002, and the homeowner replaced the roof in 2019, they're missing out on a lot of potential benefit in their insurance policy. So here's where you see it. Give it a look, especially if the year shown on your insurance policy is way too old and the roof is much newer than that. Be sure to contact your insurance agent so that they can help you update that and you can take advantage of the benefit of having a newer roof disclosed on your insurance policy.
Makes
Derek,
sense.
thanks for all the detail today, walking through that with us. If you have any questions out there, things we can help you with, you want to take a look at your policy, you need some input here or there, book a call with Derek or Brian. We'd be more than happy to chat with you and see what we can do to help. That's what we're here for.
Well,
Thanks for joining me, Derek.
that's a wrap. I'm heading out to the woods.
Very good. Thank you.